a financial advisor. Sorry, I had to push record on that. I am not a financial advisor, so I cannot tell you what securities or what stocks to buy, nor can I execute any of those on, on your behalf. So from this point on, anything that you learn, anything you do, all the risk is on you. So as you're watching this video, you're signing off and saying, I'm all this is for educational purposes. Anything that you do outside of that, you take on that risk. All right. Number two, gotta understand I have three different levels of learners on this call. Okay. I have newbies, I have beginners, and I have intermediate. So with that said, you all have to be patient. Be patient with me as I try to, get through all this and get everybody included and learning everything they need to learn. At least the foundation, okay? So just be patient with me as I just grind through it, all right? All right, number three, I cannot take questions, not in this session. But guess what? I started a whole session with nothing but just Q&A, okay? Questions and answers. Next Tuesday from 7 to 8, I'm going to take all your questions. So try to soak up, try to learn as much as you can. Write down your questions. Please write them down. I will not be able to fill them today because there's so much information that I have to share with you all, okay? So much information. So please write them down. Sorry, I got this board behind me. We want to make sure that you all can see it. Please write those questions down. You know, hold them next week. Bring them next week. We're gonna have like a fireside chat and just go back and forth. All right. The last thing I want to say is we have 2 minute, 5 minute. We have two 5 minute breaks. Okay. I'm gonna break it up because there's so much information. I want to be able to make sure that you are digesting things, but also resting your brain because you're going to constantly be soaking up a lot of information. So I want to make sure that y'all good on that. All right. So without further ado, let's get ready to rumble. Let's go, baby. Sorry, got too much light going on. All right. So let's get started. Now, you might ask yourself, as a newbie, what is a stock? What's a stock? Well, in simple terms, in simple terms and simple definition terms, stock is the sale of ownership in the means of shares. It's the sale of ownership in the means of shares. So a company's ownership is the sale in the means of shares. Okay. So basically, what am I saying? What am I saying? Okay. Let's pretend like we have our own company. All right. And look, since I got a lot of like probably like 50% of the people on this call is probably line dancers. Okay. We're gonna have our own company called Ray's Boom Boom Room. You remember that? Ray's Boom Boom Room. All right. Now, as a company, we wanted to build a whole new facility. Okay. We want to build a whole new, multi-purpose facility. Come to find out, it's gonna cost us $1 million to build that facility. Man, we go ask our cousins, our aunts, and everything for some money. Most of them ain't gonna be able to come through. All right. So, but there's a way we can raise some money, and that's by getting on the stock market. Okay. So, as a company, and I'm showing you from the company's perspective, we got to raise $1 million. And the way to do that is we can go to the stock market and actually raise that. Okay. So, what we'll do is we'll fill out a form, send it over to the SEC. Okay, which is the Security Exchange Commissions. Okay. And once we get that form back and say, okay, now we can present you or we can put you up on the market. Now, the market, when I say the market, that means NASDAQ or New York Stock Exchange. So every time you go on TV or whatever, and you see like the NASDAQ or New York Stock Exchange, just know that that's the market. Market, just a marketplace. You've been to a marketplace, flea market, all those things. Similar action is you have, you have the activity of buying and selling of goods and products. Okay. So basically, it's just a marketplace where the investor and companies can meet and sell stock. Okay. Now, our goal is $1 million. So we get up on the market. Okay. Our goal is $1 million. SEC says, I will give you 100 shares to issue to the investors that want to invest in your company. Okay. So they allow us to have 100,000 shares to sell. 100,000 shares. And at the price of $10 for each share gets us $1,000,000. So we get on the market, they give us 100,000 shares to sell at a price of $10, boom. And if we sell all those shares, we got $1,000,000. We have our capital. Enough said, go build our building and we're good to go. That's Ray's Boom Boom's room. All right. Mainly, all you got to worry about from a company's perspective is they build capital, they raise capital so they can go do the things they need to do. And that's all it is from a company's perspective. But we're not here for the company. We're here because you're a stock trader. Okay. From a stock investment or from a stock investor's point of view, let's go and we say, I want to invest into Ray's Boom Boom's room. Okay. You have $1,000 that you want to invest in Ray's Boom Boom's room. Okay. Now they issued 100,000 shares at $10 per share. You have $1,000 to invest. Okay. You take that $1,000 and with that $1,000, you can get 100 shares at $10 per share. Okay. Are y'all with me? Give me a thumbs up. Make sure y'all with me on this one. Okay. I see some thumbs up. Okay. So you took that $1,000, you invested in Ray's Boom Boom's room, you got 100 shares at $10 per share. Okay. Now you may ask yourself, how in the world do I profit from this investment? This is for the newbies. This is for the newbies right here. How do I invest in this? I mean, how do I gain from actually putting $1,000 into Ray's Boom Boom's room? Well, let's go back and let's think about economics, the very basics of economics. You have supply and demand. Remember that, supply, demand. If you don't remember anything else that I cover on this lesson, remember the basics of stock investing is supply and demand. You can use it all the way throughout, okay? Now, if you don't understand supply and demand, let's go back to a perfect example about last year, okay? Let's go back to March of last year when COVID hit. I remember COVID hit. Y'all remember that? I'm sure y'all do. I think everybody remember that one. As soon as we got hit with this COVID news that we had to, start hunkering down and staying in our homes and everything, everybody went out to go buy food. Nah, that one right. Let me see. Now, it wasn't food. Everybody went out to go buy water. Nah, want water? Yeah, want water. Let's see. What was that? Oh, I got it. Everybody went out to go buy toilet paper. Out of all things, toilet paper. Y'all remember that? Supply and demand. So before COVID, toilet paper, like a pack of 4, 6, cost you around $2 or $3. We go to the store, get a couple packages of toilet paper, cheap, fairly cheap. But when COVID hit and everyone started to buy toilet paper, the demand for toilet paper was up. So because the demand of toilet paper was up, so the prices started to rise. Why? Because the supply started to get low. So those same packages of toilet paper that you saw that was for $2, $3 went up to like $6, $8, $10 per pack. That's supply and demand. Take that same concept. All right. Let's take that same concept. Ray Boom Boom's room hit the market with $1 million capital raise of 100,000 shares. Okay, they only have 100,000 shares for the market to buy up. Okay, so the increase or the demand of Ray Boom Boom's room, let's say it went up. Let's say it went up, and let's say 50,000. Let's say 50,000 of those shares were sold. Okay, 50,000 shares sold. That leaves you with a total of 50,000 shares outstanding to be sold. Okay. And because that demand, let's say the demand was up, because that demand was up, that also raised the price of each share. So that $10, you remember they came on the market with $10, that $10 jumped. Okay. So that $10 jumped to $20 per share because that demand was up. It brought the supply down and the demand was up. So it also raised the price of the shares. Okay. Now, because you got in early, because you invested early, you invested your $1,000 early at $10 per share. When you was holding on to your 100, okay, and the price went up, it also raised the price of your shares up. Okay. So at one point, you had 100 times 20. And what is that? 2,000. Your initial investment of $1,000 now jumped to $2,000. Why is that? Because those 100 shares that you were holding on to went up because the demand was up. Remember, I said the whole basic concept of stock investing, trading, and things like that. It's always about demand and supply and demand. Okay, so it went up to $20, right? So it increased also your whole dollar amount here. Now, how do you know your profit? Okay, so you subtract your initial investment of $1,000, and that leaves you with $1,000 profit. So that's how you make your money. When the demand of a particular stock is up and it raises the price up as well, and you're holding on to those shares, the difference of that price is your profit. So in this case, if you invested $1,000 in Ray Boom Boom Room with $10 per share and it went up to $20, your whole profit would be a whole $1,000. Amazing. Banging. Can you imagine that? Banging. That's a good investment. That's 100% return. Oh my goodness. That's a great investment right there. Now, that's the plus side. That's the plus side. That's how you profit. That's a simple method of how you profit when you're investing in a company. Now, the exact opposite is also true though. Okay. So let's say, you bought it, boom, it went up to $20, right? All right. And we already know that was 2,000, right? But let's say all of a sudden the demand dropped. In other words, investors, they didn't see Ray's Boom Boom Room doing this thing. Line dancers, they went to other, venues. They started supporting some other stuff, and they wasn't getting no love at all. So it wasn't growing like they thought it was going to grow. So the investors that bought these shares, they started to sell them back. Okay, all right. So 50,000 that was sold, at one point actually went down to 25,000. So 25,000 went back into here. So let's say, it jumped. Can I write this? So let's say it jumped to 70, it went back up to 75,000. Okay. That means the demand started to drop. Okay. The demand started to drop for these. And so because the demand dropped and the supply started to rise, guess what? The price started to drop. And let's say it dropped to 15. Okay. Boom. That's 1,500. At one point you had 2,000. Now it's down to 1,500. But let's say a whole slew of shares started to go back, started to be sold back. And because of that price action right there, that's where you'll start to see your profits start to drop, as well as you can start to lose money. Let's say, the price went all the way down to $8. Okay. Let's say it went down to $8. Your initial investment you're now in the hole from your initial investment. So you went from, $1,000 and you're in the hole $200. This is how much you're in the hole now, $200. So I have to show you all the positive way, but I also have to show you the negative. So you'll understand the impact of investing, on both terms. So when you're putting in $1,000 in a company, you got to make sure the company has that demand. Plain and simple. It has to have that demand. The demand has to be had. So in a lot of terms, you're going to hear a lot about volume. You're going to hear a lot about, the buzz and a lot of investors being interested in certain companies and things like that. When you hear that type of stuff, that's because a lot of people are trying to trade that. They're trying to get those shares. They're trying to get those. And so when you're seeing that type of stuff happen, that means price movement is starting to happen. Okay. Where at one point when the demand was high, okay, the stock price went up. Okay. When that demand dropped, the stock price went down. Okay. And before long, if you see it below that $10, you know you're gonna start losing money. Okay, plain and simple. That's the basics. Guess what? We're at our first break. I'm gonna let that rest. You get 5 minutes. You go do what you got to do. Use the restroom. Go get something to eat. Whoop the kids. But come back. 5 minutes. All right. Got 3 minutes. 3 minutes. Then we're gonna pick back up. right, 1 minute. All right, before I get into the next section, everything that I just went over actually comes from this book called Stock Investing. This is one of the first books I read when I first got into it a couple of years ago. This actually gave me the first, levels of understanding when it comes to stock investing. Great book. I know it's called Stock Investing for Dummies, but trust me, it's a lot of good material in here. And it gives you that basic understanding of investments. And I highly, highly recommend, picking this up. Again, everything that I just went over, I simplified it, in a way, for you to kind of, understand the concept of stock investing itself. But this book goes into details, okay, about what I just explained. Okay. But overall, I mean, after you, read it and things, you'll kind of see exactly where, I was going with the first piece as far as investing, stock investing. Very good book. Stock Investing for Dummies. Okay. All right. Let's get back into it. Now, can you all see this? I'm not every I know it's a lot of information up here, but can you all see this? Can I get a Shannon? I see you. Can you confirm if you can see this, Shannon? I can't hear you though. Just thumbs up. Okay, good, 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 good. Thank you, Shannon. I appreciate you. All right. Now, stock trading 101. This is where the rubber's about to meet the road. All right. Now, if you got on here trying to learn stock investing, this is not the platform. Okay. This is stock trading. And, you know, there's a constant, a lot of people think stock trading and stock investing are the same thing, and they're not. Okay. There's a complete difference between the two. Stock investing, in layman's term, means you're going to hold on to a stock long term. Okay. Meaning you're going to hold on to a stock at least a year or more. Okay. And basically, a lot of people that do stock investing, myself included, is aiming to build up things for the future. Okay. A lot of, your retirement funds is centered around stock investing. A lot of people get into stock investing to do, maybe purchase a home, again, capital for your business, things like that. That's what a lot of people utilize stock investing for because it's long term. Okay. You're going to hold on to that stock long term. Stock trading is the exact opposite. Stock trading is basically saying you're going to hold on to that particular stock, but you're going to trade it very soon. Okay. Meaning within, you can trade, you can trade that stock or you hold on to that stock in seconds. Okay. You can probably hold on a couple of minutes, hours, a couple of days. Most stock traders, they don't hold on to stocks probably no more than probably 3 to 6 months. That's the probably average for a stock trader to hold on to this because you're holding on to the stock in an effort of getting short-term gains. Okay. That's all you're looking for is short-term gain. You're trying to get immediate profits. That is your aim. Okay. You're trying to get quick profits. So stock trading and stock investing are two totally different things. And it's very important that you know that because you can't get into this and think that you're trying, stock trading and think that, you're looking for this to build up for long-term growth. That's two different concepts. You got to get that you got to get that cleared up from the jump or you'll hurt yourself. Okay. Remember, stock trading is short-term hold on stocks. Okay. You're looking to trade it and get that quick profit right then and there. So again, from this point on, I'm going to be teaching stock trading. Okay. All right. Now, there are two main types of stock trading. Two. Now, granted, there are other styles, of stock trading, but there are two main ones, that you have to understand. Okay, that's day trading, and the other one is swing trading. Again, there are other styles of stock trading out there, but the main ones that people use are day trading and swing trading. Okay, understand that. Now, it's very important that you understand this concept because you got to know what type of trader you're going to be. Okay, you got to know that from jump. Are you going to be a day trader or are you going to be a swing trader? Let me give you the difference. Day trading is basically a person who constantly trades throughout the day. I know, self-explanatory. I know, but that's all they do. You see them on screens or on TV and movies or whatever, and they got like 4 or 5 different monitors that they're looking at to see stocks move back and forth, back and forth, back and forth all day. Most day traders, they do that because it's an algorithm that they're trying to catch these good prices and get good profits. They turn around these stocks like quick, like boom, 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 boom. That's what you see a lot of like the Wall Street cats when they on that floor. They constantly like, give me that, give me the three, give me three, give me three, give me four, give me four, give me four. They're trading throughout the day. Those are day traders. Okay. Now, if you want to be a day trader, cool. More power to you. I'm telling you, it's going to eat up your time. And just know that you can't have a full-time job and do day trading. Won't work. You can probably do it part-time, but it won't work. Okay. Unless you're going to focus on it. Now, another aspect about day trading that you got to remember if you're going to go into it, you have to have $25,000 in your brokerage account by the end of the trading day. Okay. If you've been day trading and if you fall below that $25,000, you will be penalized. Now understand that. Again, in order to day trade, you have to have $25,000 in your brokerage account. If not, they would ding you. You would get penalized for that. Understand that. Okay. But the perks about day trading is the fact that you can just go in and out of these stocks like constantly, like freely. Okay. There's no limitations. Okay. Now, swing trading, on the other hand, this is what most of us will be doing. This is what I do. If you got a full-time job, you got 5,000 kids, you got a lot of things on your hands. You really don't have time to be doing day trading, but you can actually do swing trading. And this is what I do. I do swing trading. Most of America that trades, they do swing trading. Okay. Now, swing trading, on the other hand, is basically holding on to a stock for at least a day or two. Okay. Okay. That's probably minimum, a day or two. Now, because you're not a day trader, you're not looking to trade throughout the day, but you could hold on to that stock, you know, 3 days, a week, even a couple of months, because what you're looking for is for the turn. Okay. You're looking for a particular turn in the market, okay, for that particular trade. Okay. So you're going to hold on to it until it reaches the goals that you set for yourself, or, falls into the strategy that you have set out. So swing trading, again, the difference between day trading and swing trading is you will not be, holding on to those stocks and trading those stocks throughout the day. You'll hold on to it for a day or two, a couple of weeks or whatnot. But again, remember, with with day trading, you got to have $25,000 in your account. Okay. But with swing trading, you can just have $3 in your account. You're good. There's no set limit or minimum in your account that you need to have for swing trading. So that's why I said, everybody can do swing trading in terms of, funding and things like that. It's the amount of money that you have that you can use to trade and things like that. So there's no limitations with this. Now, with that said, got to give you a little, not negative news, but little understanding about making trades either way under stock trading. Okay, when you're doing short-term trading, the probably the worst thing about this is the taxes that have to be applied to this, because you're not long-term. Okay, you're not investing. The taxes are different for this. Okay, you're on a different, based on your bracket. Okay, based on your tax bracket, it's going to determine what type of profit you're able to take home. Okay, now you got to keep that in mind, because trust me, you can make a lot of money with this. Okay, you can probably make like 20, 40,000, within a couple of months. But you got to remember, if you're in that tax bracket of like 20%, 35%, a lot of that's going to be gone. Okay. So you got to remember, you can't just be going out there making these profits and going out there and spending, quickly. You got to do your calculations or you can get dinged with that. Okay. Just trying to, advise you on some of the, the negative things about stock trading. Other than that, basically if you strategize and you put your tax strategy together, you should be good, should be good with that. But again, swing trading was one thing that most of us will end up doing. Okay. Now, how you get started? How do you get started? The first key, you need a brokerage account. Okay. You need a brokerage account. Now, there are numerous brokerage accounts out there. I'm not going to go into the different types, the different kinds and things like that. But I have provided a few that I consider, some strong accounts that you can, open up and begin trading with. Now, again, you're trading. Okay. As a stock trader, you need a strong account where you can, be able to do your work. Okay. So, Webull, TD Ameritrade, E-Trade, Robinhood, the controversial Robinhood. I know. Charles Schwab. Okay. These are just 5 of like numerous of brokerage accounts and where you can trade from. Basically, it don't really matter. But what you're looking for in a brokerage, platform is you're looking for stability. Okay. You're looking for the ability to provide stocks on both the NASDAQ and the New York Stock Exchange, at least those 2 platforms. Okay. All right. And then strong, like bigger brokerage firms, they actually like Charles Schwab, they can provide OTC, which is over the counter stocks. Okay. Which you can do a lot of good things with those. Okay. But you want these strong platforms to be able to trade for them. Okay. That's key. If you don't have a strong platform, you're not going to be able to be, as productive or profit much with weak ones. Now, when I say weak ones, Cash App, no, please don't. If you're a stock trader, Cash App would not work. Stockpile, no. Stash, no. Acorns, no. Those are not stock trading platforms. Listen to me. No knock to them because they have a purpose. And I like them. Actually, I like them for kids, your teenagers and things like that want to get in the stock game and get the bare minimum of things and bare understanding of stocks and things like that. Give them that platform. But if you're getting into true stock trading, please stay away from those apps, because they're not going to provide the things that you need. Another good thing that these platforms provide is education. They provide a lot of education, news, they help support your decision making, and that's what you need as a stock trader. You need things that will help support the decisions that you are making, and having a strong brokerage account will help you do that. Okay. So it's very important that you get a strong one. Get these. There's some other ones out there that are good. Fidelity, Forex, and a lot of other good ones that are out there to use. Okay. All right. So you want now you have your brokerage firm. You have your brokerage account set up, and you're ready to rock and roll. Some people ask me, be like, Jerome, how much should I invest, or how much should I start off with? One, I ain't trying to advise you and not, but I'm gonna let you know, whatever amount you can afford. Look, do not get in this if you got bills to pay. Do not get into trading if you got other important things you got to take care of. Don't ruin your whole livelihood trying to do stock trading, because it's not worth it. I'm gonna just say, don't lose your home over this. It's not worth it. Okay. Trade what you can afford to lose. That's my motto. If you can't afford to lose this amount of money, don't use that amount of money. You know what I'm saying? Put what you can, put what you can lose in there. If it's $100, boom, work with it. 1,000, boom, work with it. 5, 10,000, boom, work with it. If you can afford to lose that amount of money, that's what you want to. That's the amount you want to start with. Okay, that's the amount you want to start with, and it's okay to start low. I started low, man. I didn't have much, man. I think I put in like $300 when I first started. I didn't know what I was doing for real. I mean, but I had to, get those practices. Oh, I just remembered something. What also can help you, with understanding how to trade is there's a few platforms like TD Ameritrade, E-Trade, and Webull. These 3 platforms actually provide a practice platform that you can utilize in order to familiarize yourself with trading. Awesome option. I would suggest you all, if you're apprehensive about starting trading with real money, they provide some fake money that you can use, and it matches the current market, and you can, start learning how to trade on these 3 platforms on a practice, from a practice perspective, just to get a good feel. And you're not losing money. They may start you out with $10,000 right there, or you can, limit it to say, man, I only got 500 I can do, but I want to learn how to do the trades, before I put actual money to it. So Webull, TD Ameritrade, and E-Trade, these 3 platforms provide a practice platform that you can utilize to practice trading. Strongly encourage that. I strongly encourage that, especially if you, real conservative about your money. You don't want to lose it and things like that. Strongly encourage that. Okay, strongly. Oh, I know you have a question. I do see the hand, but hear me out. I only have so much time to go through this. Please write your question down, and we're going to go get right back into it on Tuesday with nothing but a question and answering platform. Okay, a Q&A platform, Q&A session that we can just do nothing but go back and forth with dialogue. Okay, write all your questions. I may end up extending that time because I think it's going to be a lot of questions after this. Okay, but write your questions down, please. I have to get through all this information. It's a lot of information I got to get through. So sorry, but yeah, we just come back on Tuesday, 7 to 8. Okay, 7 to 8 on Tuesday. All right. Anyway, so yeah, so these are some good platforms for you to get practice on. Now, going back to where I was. After you set up your brokerage account, your next move, newbies, beginners, or whatnot, even if you haven't done this, your next move, look, you have to have a goal. I cannot stress that enough. You got to have a goal. Okay, you got to start with that is your first thing before you even trade anything. If you don't have your goal or goals written down, do not trade. And look, you're not just going to hear from me. You'll hear from other investors as well. You hear from true professionals, even financial advisors. You're going to hear from everyone that know about stock trading, stock investment, that know about investing. Okay, period. You got to start with goals. Write your goals down. What are you trying to do? What are you trying to accomplish? In stock trading, since you're essentially really not looking towards, like building up like true like investment wealth for later on. I mean, it can fit inside a long-term strategy and things like that. But maybe your goals is to get a deck. Maybe it's to flip your house. Maybe it's to get a kitchen redone. It does not matter what your goal is. Okay, whatever that goal is, that's what you want to stick to. Okay, so write them down, because those goals provide the encouragement. I'm telling you. And it's going to help you stick to the plan. Very, very important. All right. I know it's like, come on now, duh, but it's truly like that. I know. I see you waving. I see you waving. Is that Princess? You can't see me? You can't. Did it go out? Hold on, Princess. I'm gonna unmute you. Hold on, because I can't hear you. Go ahead.
We can't see your whiteboard. It's a glare.
It's a glare? Okay.
Yes.
I'm gonna pull it up. Is that better?
No. The middle part, the middle column, we can't see it. Nope. I can't. Can anybody else see the middle? No, nobody can see the middle.
Oh,
Maybe,
okay.
can you shift it to the left or the right?
Yep.
Getting better. Wait. A little. Yeah, it's getting better. Yeah, shift it a little more to the left, maybe.
That's it. Hold on. You know what I'm gonna do? Hold on. I'm gonna do something.
Oh, somebody said tilted.
Was that Ike? Let me see.
Sorry.
It's okay. Is that better?
Ooh,
No.
not for me. Oh, somebody said move it back.
Can y'all see it back here? Is
It's a
that
little,
better?
it's small, but
It's small. Yeah, it's
it's
small. Let
better,
me
but
see.
it's small.
Here, I'm about to do something. Hold on.
You're gonna have to
One
read
second.
it to us.
Okay, hold on one
There's
second.
better. It's better right there, right, guys?
It's better
Okay,
right there.
it's better. There you go. Perfect. All right. Thank you.
Can y'all see it? Can you still see it, or is it gone? Because it's in the dark for me. Let me see. Can y'all see it now? Can you see it now, Princess? You know what? This is exactly what I'm gonna do. I'm gonna take it off and I'm gonna actually bring it closer. Okay. Sorry, you guys. It's just two main things. I'm gonna have to actually take it off for the next one. So goals, that's what the first one says. Okay. And then the next one is create a strategy to support. What did you say? It's a glare from the light. Let's do it like this. Let's do it like this. Can you see? Is that better? Everybody, yeah, let's get it. Let's get it. Okay. So the first one, what I was saying earlier is you got to have your goals. Write them down. You know, keep looking at them on a consistent basis because these goals keep you on track on where you're going. Okay. All right. And then from there, you have to create a strategy. You have to create a strategy. Okay. So these are two key points in stock trading. And you're going to hear strategy all the time. You know, professionals will always talk about, professional investors are always talking about what is your strategy? What are you looking to do? What is your goal? And what is your strategy? They will ask you, what's your strategy? Let me see where your strategy is. Maybe we can flip it and get where you need to go. Because a strategy it's like the roadmap, it's the map. It's the things that keep you at play, keep you, it's the things that keep you focused on where you need to go. It's your measure, it's your map to get to your goals. Okay. So it's very important that you understand your strategy. Now, because we got beginners and intermediate and newbies and things like this, what I've already done, what I've gone to do is I've actually put together a basic 5-step swing trading strategy. Okay. A basic 5-step swing trading strategy. Okay, very basic. And you can take this. Now, there are a lot of strategies you can use, when stock trading, a whole lot of strategies. Okay. But this one is the bare basic that you can just, plug, play, and go to work, make your profits. Okay. So where do we start? Can y'all see this? Okay. All right. We start with finding your company. Next, understanding the trends of the company that you found. Okay, good. I'm glad y'all can see it. Okay. Next, you want to find the entry price. Okay. Your buying price. Next, you want to find your exit price. Okay. And then last, execute, execute, execute. Again, 5-step strategy, very basic. I mean, the bare basics to getting you, in the game. The bare basics to get you in the game. Very simple. If you follow these, trust me, you're gonna be all right. Okay. You ain't got time to do a lot of the different techniques and things like that. That's fine. If you don't want to get on all the the technicalities of option tradings and bear bull type of strategies and things like that, that's fine. That's okay. That's why I say if you have these 5 steps in place, you can kick the you can look on every Sunday, like today is actually my research day. You know, I I kickstart this strategy every Sunday. Okay. That's like it's like a little part-time job and things like that. I kickstart this strategy every Sunday. And what I'm able to do is I'm able to put everything in place on Sunday. So when it comes next week, I'm set. I'm done. And I'm gonna go in depth about that. Okay. Now, again, 5-step strategy. Find your company, understand the trends, find the entry price, find the exit price, execute the play. All right. I'm gonna go into details about each one. You ready? All right. Find your company. How do I find a company? Like there are thousands of companies on the market. How do you find your company? Okay. Now, I advise you all to join, stock groups, stock trading groups. There's some on Facebook, some on Twitter. Find you a nice group where you can learn some things and also pick up good chatter about some good companies to trade with. Okay. That's one of the key things, one of the key things that I have in my system is I'm part of some good trading groups where I can hear some of the buzz that I told y'all about supply and demand. So when you're in these trading groups, you can kind of pick up on where the market is about to go. Okay. You understand? So that buzz, supply and demand, you can kind of lead you to certain things that's about to be pushed. Okay. Where people are about to, buy a whole lot of shares of a certain company. And that's where you can kind of get in, and do your thing. Now, with that said, don't go out there and just believe anything everybody says. Please don't do that. Okay. If somebody give you a company and they're like, "Ooh, won't you invest in XYZ or won't you trade in XYZ or whatnot?" Look, real talk. If you're a true stock trader, if you want to be a true, good stock trader to keep you away from, some fallacies that goes on in the stock game. You have to do your due diligence. Okay, you're gonna hear that out. You'll hear that a lot called DD, due diligence. I don't care if they tell you like, look, you can make a lot of money on this play. No matter what, please do your research on the company. Do your analysis on that company before you invest in it, before you trade that, because there could be a pitfall. Okay, it could be a straight pitfall. So do not just go swinging just because somebody say something. Like, look, if you're a true stock trader and you really want to make sure that you cover your tail and make some good profits and things like that, do your due diligence. Okay, research, understand the game, understand the company that you're about to trade with. Okay, at least from a high level perspective. Okay, secure yourself. So another way, oh, big shout out to, I think, some people from one of my groups, Black Wall Street, from WhatsApp. I think they on here too. What's up? What's up, peoples? Just had to give you a quick shout out. That's one of the good groups that I love, chilling with and learning some good things with and vibing with and things like that. So I just throw it out there because I'm in some good groups. Plus I started, a small little investment group on a smaller investment page on Facebook. Level up, join it. Some good information out there. We have a good time out there. So another one you can join up with. But again, these groups, you can hear these good moves that's being made and do your research. You can really make some good money if in on some things early. So but let's say you on the weekend, you want to do your own homework, you want to do your own research and things. What can you do? Now, hope you got a pen and paper. Okay, write this down. There's an app or a tool out there that's called TradingView. TradingView is an awesome platform, especially for swing traders. TradingView, TradingView is an awesome platform that you can use to find good companies. And basically, it's a stock screener. Okay, stock screening is a system or is a algorithm is a system built on an algorithm to find specific types specific types of stocks that you can invest in, and it just brings them back quickly versus you having to go scroll down on each company and find them. No, it puts things together in a nice neat package so you can go there quickly and find the companies that you want to trade with. Okay, so there are other stock screeners. I'm just saying TradingView is my recommended stock screening platform, and it's not only for stock screening. You also utilize it for charting, in which I'm kind of go into in just a minute. But again, TradingView. Okay. All right. So let's go into it. I'm gonna actually dive into it for a little bit. I'm gonna dive into it. Okay. Can you all see my screen? Devron, can you see my screen? Throw your hands up, throw your thumbs up. Okay, good, good. You can see my screen. Okay. Now I am sharing. Gotta minimize this. All right. I am sharing the TradingView platform from the web. Now you can actually pull this up. You can download this on your phone, your tablet, your PC or whatnot. Very cool app. Very simple. And to me, it's easy to understand. Once you get into the dynamics of this, it's very good platform. So this is what I utilize. People ask, where do I go and how do I pick stocks and things like this? This is what I utilize. This is how I filter down to what I need. Okay, what I'm looking for and things like this. Okay, now I can have this up and also have my brokerage account up. And that's the good thing about swing trading is because we don't need a bunch of high powered computers with 15 screens, 15 monitors and stuff that we're going to be looking at every day. We don't need all that. Get a good day that you like to do your analysis, your research and things like that. Get a good day in, sit down in front of the computer and start to, do your work, and start to put your strategy together for that week. This is what I basically do. I'll have this up, look for the top companies and things like that, and then I'll begin to build out my strategy. Okay, so like I said, the first step is to find your company. So on like screeners like this, what you want to do is you want to filter to what you need. And because you all really not familiar with this, I'm providing a five particular filters that you can utilize to help you narrow down some things from the beginning. Now listen, there are a there are a bunch of filters on here. When you get more like experience in trading and things like that, you can narrow down to the cent, okay, on what type of stock you want. And that's the great thing about these screeners because it gives you the inside view on specific stocks and how they could, possibly move or give you a list of things in that you can make strong plays in. The list goes on. Look at all these filters. Look at this. Crazy, crazy amazing. But what I'm going to do is I'm giving you the five basic filters that you can use. Please write this down, okay? Okay. All right, so TradingView. I think most filters, most stock screeners got the same type of filters as well. So it's not just TradingView, some other ones that you can get out there and utilize. So what you want to do is get last. Last is basically the price. What is the last price of that particular stock? Okay. And you can narrow it down. You say I got mine's under 30, $30 and under. All right. Symbol. You want to get that common stock. So there's a few that you can put in here. You don't want these unless you're going to trade, ETFs and things or preferred stocks. Most times swing traders, like I said, don't worry about these. Just put in common. You get the common stocks, you're good. You get a good list that you can pick from. All right. Volatility. This is basically saying, how often does this stock move, up and down? You want, as a stock trader, you want high volatile stocks. These are the best ones to trade with because they can offer the most in return. Okay, they can profit you the most. So you want to keep it high. I put it at 10, 10% and up. I want stocks that's just going to keep rocking. Okay. Volume is very important. You remember when I said at the beginning that one of the most important things in stock investing and stock trading is supply and demand. Supply, you're going to constantly hear that no matter where you go, no matter what type of trading you're doing, type of investment you're doing, supply and demand is very important. And what lets you know what a stock is doing is the volume, how much volume is being pushed for that particular stock. The lower the price of a particular stock, the higher you want to see that volume. So let's say a stock is trading around $5. I need that volume around at least around the 50 million to 100 million, in trading volume. Okay. Because if it's lower than those things, that means that the price is not going to move much. There's not much that it's going to do. Okay. I need around about that 50 million to 100 million shares. Now, if the price is more, like an Amazon or Google, things like that, I mean, these things are in the thousands. Okay. Like Amazon, $3,000 per share, over $3,000 per share. Now, good and well, you're not going to have, a volume over like 50 million. You're not going to have a lot of play in that. So there, around there, you're going to probably look around anywhere between a million, to 2 million, in volume. That's what you want to look at in the higher of the price. You're going to kind of look at least, at least around that much. At least around, I don't know who marked this up. That's crazy. I don't know if I can remove that. But anyway, you're going to look for the high volume. Again, supply and demand, supply and demand. Okay. And I kind of set these, okay? I set these for you all. I'm recording this so you can kind of piggyback on this if you watch this later on, okay? All right. And this other one is the exchange. Remember I was talking about earlier how, when you as a company, you're going on the exchanges, it's like the marketplace and things like that. So your main marketplace in America are the NASDAQ and the New York Stock Exchange. OTC is over the counter, which is more your lower cost stocks. A lot of your marijuana stock that you have today started on the OTC, okay, over the counter stock. They're rarely on smaller platforms because of volatility, the movement and things like that. It's just a lot of smaller platforms cannot handle OTC stocks, so they do not have those stocks on their platforms. But like your bigger platforms, like your Charles Schwab, your Fidelity, your Vanguard, you're really gonna have a wide range of choices when it comes to markets that you can pull from. But anyway, so I set these up, and you bring these back, okay? And you bring these back, and here's your search. Now, what I like to do is I want to see what are strong buys. So I sorted by, I clicked this, I clicked it, strong sales, strong buys, and because I'm a bull trader, and I'll explain that later, I want to see what's moving, I want to see what's moving, what's popping. These are strong buys, meaning these are at a good time for you to start buying. They're probably, at a low end and trending up, okay? And you probably want to get in or catch that, okay? Another aspect or another filter you can do is you can click on a change. Now, change percentage is saying how did this change over the either last quarter, the last day, the last week, or whatnot? What was the percentage change, over that period of time, and it was 6%, 1.82%. These are significant numbers to you because it lets you know how much growth or how much that particular stock had increased over that time. Okay, so look again, look, these are buys. They're in the green. These are good buys. These go in. And then you'd be like, okay, cool. I want to get in there and I want to look at it. Now, again, first step, pick your stock. Pick your stock. Now I'm great. I'm picking it. Notice I went to the screener to get my filters. Okay. Now I'm about to pick one. Okay. And because I already have something set up for you all, I'm gonna pick one that let's say nano dimension. Okay. Sorry. Let me see. Okay. Nano dimension. So I pick one, and now my next step after picking one is finding the trend. Again, 5 steps. Remember, I picked the company that I want. Okay. I picked the company I want. Now I want to understand the trend. I'm sorry. I want to understand the trend. Now, this is where charting comes in. Okay. Now, I'm not looking for you all, I'm not trying to teach you all the, in-depth understanding of charting. What I'm trying to get you all to do is learn how to pick good entry points and good exit points. Okay. Charting is a whole different ballgame. Listen, I've been an analyst, business analyst since 2003. So my eye is very strong in being able to understand trends. Okay. Naturally strong. A lot of people don't have that ability, which is very understandable. In stock trading, it's very important, especially, you're doing it, on your own and things like that, to at least get the basic understanding of technical analysis. Okay. Technical analysis is being able to get into these charts and understand the trends. Very important that you understand the trends, because they can keep you from losing money, and they also help you to gain money. Okay. The very basics of this can keep you in the green. I'm telling you. Listen to hear me out, and I'm gonna try to give you all the basic understanding of how to do this. Okay, so you picking it. Okay, let me go back some. Let me go back some. Okay, can y'all see me? Okay, now what you want to do is you want to have an eye test. Okay, you want to have an eye test. Listen, that eye test is very important. So let's say you're going out there, you're going on the screen, and you're seeing these, a lot of companies, pop up. And very first thing you want to do is have the quick eye test to determine if you want to go further into analyzing that stock for your play. Okay. First of all, pick the company. And that's what I did. I picked the company. Now let's see if it passes the eye test. Okay. Here's the eye test. Can y'all see my board? Can you throw your hands up? Who is that? Pamela. Pamela, can you see my board? No. Let me get this. I'm so sorry about this. I try to get my timing right on this. Can you see it now? Is the glare still happening? Is that better? You know what? Let's do it like this. Is that better? Can you see the board? Yes. It's a lot better. Woo. Okay. All right. Y'all can see this? Good. Okay. Thank you. All right. Now, the eye test. Okay. You start with the monthly EMA, exponential moving average, or what I call is the estimated moving average. Estimated moving average on a monthly direction. Okay. The overall direction. Quick eye test. You're going to have 3 different directions that you're going to look at. Okay. You're going to see stocks that are trading sideways over months. It's a flat. Can y'all see that line? It's a flat. Okay. You're going to have stocks that are in a bull run, meaning they're trending up over a few months, and your months, is anywhere between 6 to 7, maybe 12 months. You want to see what it's doing. So quick eye test. So it's in a bull run, Or the trade could be in a downward turn, meaning it's in a bear trend. It's going down. Over these months, it's been going down. These are the three basic eye level, types of charts that you want to utilize when doing the eye test. Okay, the monthly EMA. Okay, overall direction. You want to see which direction is this stock going in. Okay, and then you determine how you want to play it. All three of these are not bad. Actually, all three of these are not bad. It just depends on how you're building your strategy. Some people do play it sideways. Flat is just saying, it's a constant. It's going to be constant. It's the same type of profits each and every time. Maybe not be much, but it's the same thing. I like that. Bull is saying, okay, we're trending up, meaning, the higher it goes, the more money I'm gonna be able to get, on the way up. Okay. Now, bear, there are bear strategies in place where you can make money on the way down. That's what I love about stock trading, is because you can make money either direction. Okay. Flat, bull, bear, regardless. Just depends on how you're building your strategy. Okay. Now, I'm gonna keep it simple, and I'm gonna keep it in the bull because again, I'm a bull trader, but I'm gonna keep it in the bull pattern, meaning upward trend. I'm looking for stocks that are going up, okay, that are trending up. All right. Once I find stocks that are trending up over the month, now I take it to the next level. And I go to the weekly trend. Okay. I trim it down to the weekly trend. What is this stock been doing in the past few weeks? Okay. I may go back, to that, we at the end of February. I may go all the way back to the beginning of January, and I want to see what it was doing over those, that time frame. Okay. Was in that weekly time trend, weekly time frame, was the stock running flat, meaning low profit? Was it volatile over those, over those few weeks, meaning, highly volatile, some good profit to be made, some okay profit at times. You can actually lose it, quick. Think about volatility is, yes, you can gain a lot of profits, but you can also lose money at the same time very quickly, in volatile stock plays. Okay. Was it, moderately volatile, meaning, you had those ups and downs, but it smoothed out. Then you had those ups and downs again, but it smoothed out. Like, these are good ones because, you can get some big profits in these if you play these the right way. Or was it moderately high, moderate to high volatility, which is saying, it's constantly moving up, but at the same time, you can have those falls as it's building up. Okay. And again, these are weekly trends that you're looking for. Okay. Can y'all see that? Can y'all see those? Okay, good. All right. And I'm gonna break it down. I'm gonna show you all on trading on trading view how this looks. Okay. And then from weekly trend, you want to get the day movement. The day movement is very important because it tells you where you want to place your position, where you want to get in. Okay. It tells you where you want to get in. Okay. Now, let's get back to trading view. Let's get back to trading view. All right. Now, remember what I told you all, those basic trends that you want to look for. Okay. Let's see if I can maximize this. Okay. Okay. And what I'm looking at is, hold on. I lost my sides because, hold on. I lost my sides, y'all. Give me a minute. Okay. What I'm looking for is, look at this run. This is over a month. Look at this run and notice how this is in a bull run for Nano. Look at it going up. Y'all see it going up? This is a bull run. Over the months, this has been going up. And that's what I want to see. And then, let me see if I can. Go back to my, okay, better. And then I want to look at it, over some weeks. And as you all notice, you see all this is volatility. This is high volatile, highly volatile. Look at that. Look at that. That's highly volatile. Those are the images I was showing you all. Now, some may ask, like, how in the world do I pick a freaking position? How do I know where to go in? Well, I'm about to show you all. Okay. You want to start with setting your support and your resistance lines. Okay. Support, and this is very basic of charting. Set your support line, meaning support line means your bottom. Okay. This is where the stock stops from dropping. Okay. This is your bottom. That's your support. So you find support. For Nano, the support is around $9.50. You notice that the stock did not drop below $9.50 this whole ride. Do y'all see that? Okay, that's what you want to see. That's what determines where you want to place your marker. Understand that. $9.50. All right. Then you want to find your resistance. Okay. You want to find the very top. You want to find the very top of this. As you all can see, this candlestick, and this is what's called candlesticks. Again, I'm not going to go into depth about the charting because there's a lot to go over, but I'm giving y'all the eye test on how to determine, where to pick up your prices. Okay. So the very top of this over the last few weeks is right here. Okay. It's 1780. So you're going to say that 1780 is your resistance over a few weeks, and your support is found at the $9.50. So you can make money anywhere between the $9 and $17 range. That's your trend. Do y'all understand? Y'all with me? This is your trend. Now, this middle line that I put in place, this is your first, I would say, resistance in determining, your first level of profit. Okay. What I done is I found the latest, you see where it dropped here. So I found the latest support, or resistance, and used that as my determining factor of from 950 all the way into the last time there was a resistance. I want to make profit between these two. Okay. What you see on the side is the stock price. Okay. This is the stock range price. What's at the bottom, of this chart? This is your range, your date ranges. So, you got February all the way to the 26th. Okay. Just to get you a little familiar with the charts. Okay. Now, how did I determine 950 as my support? Again, because the stock did not drop below this over the last few weeks. And I'm like looking at this, woo, that's money. We're in the money right there. Okay. 950. And we're at the low end. Look at this. We're at the low end of it, and there's support. So I would say I want to get my entry, going back to my strategy. I found a company. Now I set my trends. I found a trend. Okay. This is what you're doing. You're finding your trends. Okay. Now you want to find your entry price. This is where you find your entry price. You're saying to yourself, if the support is at 950 and it looks like we're still, around that range, maybe I can get in around between 950 and 970. That would be a good entry point for this. And as a swing trader, because it hit this before, it tested this resistance before, you can make the determination that You're going to hold on to that stock until it reaches $12 and at least 40 cents. You want the profits between this gap. Okay. Very basic. Find your company, understand the trend, find your entry point, and then find your exit point. So here's where I'm going at. For Nano, I'm saying I want to get in at 950. That's my entry point, and I want to exit at 1240. Okay. Next, and that's my strategy. That's my strategy. Next, I'm gonna go to my brokerage firm. This is mine. This is one of my platforms, Charles Schwab. So this is how you execute it. Okay. So you can go. You're gonna put in. Sorry, I gotta reset it. I had this open too long. Okay. So we're going nano dimension. Okay. I found my company. I go into my company and I say I want to trade or buy a certain position in here. So I will put in my quantity. Let's say I only want, let's say I want 300. I go in and put in, this is where you put in your limit as a stock trader, as a swing trader. This is where you put in your entry. Okay. Your entry price. Remember I said 950. You see I was trading around 984, but I say I want to get in at 950. Okay. And so you'll put in your price. Okay. And then you put in your timing. I don't know if it's going to allow me to do this right now, but you put in your timing. Now let's say good until cancel. I want to hold on to this for a minute. Okay. It means you're going to wait until the market opens. And if that price drops and hit this 950, then your brokerage firm will execute that play for you. Okay. Oh, I want to buy. Sorry. I want to buy 300. So I'm buying this. This is the estimated cost to be able to buy this, $2,850, $9.50 per share. That's what I want. Then I review my order. And I'm saying I want to get in that at 950. You see that day range? That's good. That's good. Get at 950. You would put this in. I'm not about to execute it right now, but you will put that in, and once it execute, you'll sit. That's your entry play at 950. Okay. Now, here's a trick that I like to always, provide those who, who are in the game and things like that. Um, let's say we have a certain exit price that we want. Okay. I'm not about to execute this, but you can set your sale. Listen to me. Set your sale at a certain limit. I'm taking Neo as a perfect example. I want to exit out at $60 per share. That's my estimated cost. Well, what will be returned once I sell is 18,000. Okay. So I want to set it at a limit of $60. And this happens after you've been, your issues of shares have been executed and you're in the play. Once you're in the play, you can set your limit to sell at a certain price and just sit. That's why I say swing trading is so good for those who's on a go, who's busy and things like that. Because once you in the play, you go back into that position and you go back into that stock and you set the limit in where you want it to sell. Okay. That's because you're following your strategy, your entry and exit strategy. Boom, set it, review it and things like that. and you're good to go. Place the order. Boom, go on, do what you got to do. That's it. That is it. That is it. Before our next break, I'm going to show you, the numbers. Let's play with the numbers on what this will look like. If you show you the numbers on what this will look like if you had executed this nano, at 950. Okay. Let's look at this real quick before we go on break. Let's look at this real quick. So let's say you invested $1,000. Make sure y'all can see me. Stop sharing. Let me stop sharing this. Okay. Is it back on me? Y'all good? Are we good? Okay. Thank you, Pamela. Okay. Let's say you invested $1,000. Okay. You want to get in nano. Okay. Nano, this is your entry at 950. This is how I do mine, like almost every Sunday. Okay, let's say $1,000. You're investing $1,000, 950. You want to get in at 950. You want to exit, meaning you set your limit. You want to exit at $12.40. What is my profit? Potential profit. Can you all see that? Y'all good? Everyone can see that? You good, Pamela? Can you see that? Thumbs? Okay, good. Want to make sure. All right, nano, $1,000 trading value. I mean, what I'm going to trade with. This is what I'm playing with. My entry is at 950. My exit is at 1240. Now you do this as a swing trader, you do your homework every set day that you set aside. Mine is on Sundays, and you put in your plays to see where you want to go in at, because all you're going to do is you're going to set it. I'm trying to make it as simple as possible. Go in there and you say, look, I got $1,000. I want to get in around 950. That's 100, that's 105 shares. That's 105 shares. Okay. I want to exit at $12.40. That's 1,300. No, that's not the profit. That's the total. The total is 1,305, but your profit is $305. Now let me tell you, amazing. Okay, these plays happen, within weeks. A couple of people that were on my page actually played a couple of these things, and they see what they know exactly what I'm saying when I'm telling y'all. This can happen on a weekly or about every 2 weeks. You could be making this play. Okay, the same exact play. Because of the way the market goes. That's why I say high volatile plays. You put in, you set your amount that you want to get in at, you set your exit amount. Once you get in, you set your exit amount, and once that it reaches that exit amount, it executes right then and there, gives you the total, subtract your profit, $305 off of that one play. That happens within a week or so. That's within a week or two, because I told you, when you're doing your weekly trend, you can see, how the market moves, or how the prices move within that week, and you can determine, what you can get in at and where you can possibly get out at. Okay, and that's the profit. I mean, think about it. I mean, in a savings alone, if you put $1,000 in the savings, okay, in the savings account at whatever bank or whatever, okay, you probably get like 0.02% on that. It's crazy. You ain't make in that within that year. That's nothing. Not $1,000. You're probably getting like a couple of cents for that year, 50 cents for that. You really don't get good return in the savings account. But think about this: you can get it within a week or so. You can get a return of $305 on one of these plays. And that's just one. Amazing on what you can do with stock trading. It's amazing. It's amazing. All right. Now we had our last break, and then I'm gonna end it with a shebang. Okay. I'm gonna end it with a shebang. So 5 minutes. We'll be back. So do what you got to do. Be back in 5 minutes. There's a lot of information I know I provided. Be back in 5 minutes. Thank you. I appreciate the love. Glad you all picking up. Thank you. All right, 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 all right. Right. All right, all right, all right, all right, all right. Can you hear me? Can y'all hear me? Denisha? Okay, thank you. Good. Thank you, Kiki. Okay, all right, all right. Ah, the freaking glare. Trying to make this thing. Me and my boy Ike, man, we thought we had it. Thought I had this light the right way. I don't know if I can. Can y'all see that at the top? Denisha, can you see that? You can? Good. Okay. All right. Um, all right, we're about to get into this last piece. Okay. About to get into this last piece. All right. All right. Give me some room. All right. The last, listen. Everything that I covered, um, everything that I just covered derives from these two books. I try to simplify it as much, y'all. I try my best to simplify as much. But these two books, again, the Dummy series, banging for just the bare basics of trading, getting you in the right position to make good profits. These are the books that I read, to understand trading. Okay, that's what the first part that I was covering, to understand how to trade and the difference between, the swing trade and day trade and things like that. That came that's derived from this book right here. A lot of the teachings came from this book, and there's some other more advanced books, that I recommend, that I like, But if you're beginning, trust me, this right here will get you right. Okay, trading, for dummies. Okay, that's the trading aspect. Now, the last piece that I covered, and that was the technical analysis. Again, a lot of this made sense for me because I'm in that, I'm in that as part of my career, so I can pick up on a lot of trends and things, and make sense of numbers, and how things move, and things like that. So naturally I can pick that up. But if you're not that, not that savvy, which is okay. A lot of us don't have that, particular, experience, but you can get it, even on a basic level. And this book right here, when I read it, it made so much sense because it provided the very basics of understanding technical analysis, even from a holistic perspective. Even if you're not even getting the stock trade, like a lot of these things that was making, it makes sense. It put things together, and able to help you put the picture together so you can make the right decision. That's what this book does. Getting out there, and I was able to understand, give y'all the charting to understand the charts from a high level. But this book right here, my goodness, woo, hey, it takes your charting to the next level. And I provided you all with the basics to where you can get in there, get some money, on a basic level, and do your thing for real, where you can survive in trading and things. But a technical analysis book is nice. Okay. Now this last part, it's not gonna be as long, but this is a lot. It's geared more towards like the intermediate people that are already in play, doing a lot of things, and not that beginners or newbies can't pick up, because it's a very vital, strategy that I use that can really produce some good money. Now, I'm going to introduce some concepts, some hard concepts to kind of, comprehend, in terms of maybe some of the way some of us think. Okay, but in order to become a successful, trader, and if you're looking to make more profit, okay, looking to make more profit, you got to understand this basic, get this basic, understanding down to a science. Okay, myself as well as many other investors, when you're trading, when you're buying stocks, okay, you're buying shares. Look, do not get into you can't, if you want to be a true trader, you can't think that you're going to make good money by buying one or two shares of things. Sorry, it doesn't work like that. Unless you're looking to, you got in like on a Tesla, you bought on one and you knew they was gonna jump to like $800, like that. That's good. Even though it took time, that's good. That's some good stuff. $1,000 per share and things like that was a good play. You got one or two, and it turned out like that. 99% of stocks do not do that. It doesn't work like that. So with that said, look, you can't think that you're going to get one or two shares and think you're going to really make good profit. Okay, cut that out. Please do not. If you want to be a serious trader, you got to be in a mindset of buying in bulk. In that first book that I showed y'all in stock investing, it reiterates that principle, that understanding. If you really want to make good money, good profit and things, you got to be able to buy in bulk. Okay, meaning you got to put good money behind it to buy certain things. And granted, you don't got to have thousands of dollars. It's about buying bulk of a certain product. A certain stock. Okay, you can get a whole slew of shares with $100 or $200, and where the price is around 50, 50 cents. My rule is if you can't get 5 to 10 shares of a stock, don't trade it. Do not trade. Like that's my rule, and that's a lot of rules. That's a rule for a lot of investors. If you can't get 5 to 10, if you can't get that, you're wasting your time. To me, you're wasting your time. If you can get 5 to 10, of that stock, you good. You're sitting good. You're really sitting good. You're in can make some good money. Now, with that said, okay, I have a one of my, I got like, I think 7 strategies now, but one of my main strategies that I love that I'm about to give to you all for free, like basic strategy. I love it. Okay. It's called the war piece. It's what I call the war piece. Okay. To understand the war piece, you have to understand money. Okay. A lot of people do a lot of things for money. Money controls a lot of people. Okay. A lot of people are slaves to money. In the war piece, you have to understand money cannot rule you. It can't, money can't be your master. Because if it's your master, this won't work. Matter of fact, trading won't work. Okay. You got to understand that you are the master. Okay. And that your money is a slave to you. Do you understand that? You have to understand that your money should be making money. Period. Your money should be making money. And that's all it should be doing. It should be grinding. While you out here grinding, your money should be grinding. It should be working for you. It should be working for you. While you out here doing your thing, your money should be turning and returning more money. So that's the concept of the war piece. Okay. When you get that concept, you'll understand where I'm going at with the war piece. The war piece concept is saying, in short, I got a set sum of money in my brokerage account that does nothing but make profit for me. That's all it does. It's a set amount of money that makes profit for me. I don't include this in a return. I don't include this as money that I'm going to exit out, or remove from the brokerage account. No, this money, it stays. This amount of money stays, and it does nothing but work for me. It goes into these positions and it turns for me. It works for me. It keeps turning, doing the things I'm asking it to do so it can make the money that I need. That's what a war piece is about. Now, you may ask, what does that set amount of money may be? It depends on what you set it to be. It can be 500. It can be 500. It can be 1,000. It could be 5,000. And to me, if you want to get good return, you want to stay around, have a war piece around $1,000 to $5,000. That's a good war piece to me. to get good, because you can get into some good plays and return a good. You see how I was showing you our examples of the $1,000. Okay, in Nano, y'all see how it returned $300, right? Now imagine, going back to what I showed you all, imagine that $1,000 producing $300 every 2 weeks. So every month you're making an extra 600 or so, $600+ a month. Think about that. And that's just money just working for you. $600 a month based on that war piece. It's just doing that, but producing the profits that you can, that you can use later on. Now, granted, yeah, you get taxed. That's why you kind of build in your tax strategy. But again, this is, if you're not an Uber driver, if you don't want to get out there and do, you don't want to get out there and do some, what do I say, DoorDash and things like that. You don't want to get into any of that. Stock trading and understanding this war piece is a great way to have a secondary income. I'm telling you, great way. And that's what I use the war piece for, is produce this profits or produce money for me on a consistent basis. Okay. Now, first, you start with a war piece. First thing is you got to know what is going to be your war piece. What is your war piece cost? How much is your war piece? Again, let's say your war piece is $5,000. Okay. And I'm showing you all example. Okay. Let's say your war piece is $5,000. All right. I know y'all can't see this. Hold on 1 second. No, let's say your war piece is $5,000. And so basically you're saying this amount will always produce the profits each time I go into plays. I'm gonna show you how this work. Okay, let's go back to Ray's Boom Boom Room. Okay, where we had, the price was at $10 per share. Okay, $10 per share. Let's say you have 5,000 to invest in Ray's Boom Boom Room, and you knew Ray's Boom Boom Room was gonna go up to $20 per share. Okay, this is how you set up. Now going back, I'm connecting the dots. This is your entry. This is your exit, because you did your analysis and you're like, dude, I get in at 10 and this thing is trending between $10 and $20. Woo, and I got 5,000 to use. Woo, let's go. Let's get in there. Let's see how much we're gonna get. See how much it's gonna get. Potential profit. All right, let's look at that. So what you want to do is you want to take that 5,000 divided by 10. That gives you 500 shares. You multiply that by 20. Sorry, I didn't put the total. I keep forgetting the total. That gives you $10,000. Look what I'm doing, you all. I'm showing you what war pieces do. I'm giving you all one. I'm telling you all. Listen. You're trying to make money. You hear me? You're trying to make money. You want to figure out how investors are making true money, good money, like on a consistent basis. Think about this. This is in 1 month. Let's say this happens in 1 month. Okay. Hey, this happened in 1 month. Look, you got in at 10. Your exit point is at 20. That's a total of 10,000. Subtract your initial investment of 5,000, or your war money, or your war piece. Sorry, you subtract your war piece, and look at that. Oh my goodness, look at that. Your war piece made that $5,000, and that happens in 1 month. Oh my goodness. Woo, I'm done. Think about that, man. Here's your goal. This is your goal. This is what you want to use each and every time, every month. I'm giving y'all a simple strategy, one of my simple strategies of how you continue to make good money. Think about it. Your war piece is at 5,000. You find a good spread. You're doing your analysis. That's what I say. You do your analysis on Sunday. You find, ooh, here's a good spread, $10 gap between this. You know, this happens month after month. Get in at 10, it's a possibility for that thing to hit 20. Woo! It hits 20, exit, boom. You got 10,000 total. Subtract your war piece, 5,000. You get to take, woo, that profit. True, you're gonna get, you got, and do your taxes on it, take your taxes out on it, but still, that's sitting. I mean, how many people can make 5,000 in 1 month? I mean, think about that. That's a supplement. That's an additional income. I told you, some of y'all about to get some good taxes back. Some of y'all about to get some good taxes back, and that stimulus check. And all I'm saying, double it, triple it. I'm saying, get in there. You can make some good money with stock trading. Think about it. That's on a low. That's on a low scale. That's of course, a lot of people don't have that $5,000 sitting around. Cool, but let's say this is your goal. So, I think $5,000 in my books can be the minimum. But let's say you don't have $5,000, to trade with. Okay, and I'm gonna show y'all some other aspects about the war piece. Let's say you don't have the $5,000 to trade with. Let me show you all something that you can do. All right, let's watch this. Let's say your goal, going back to goals, is to get a high war piece. Okay, is to get $5,000. Okay, let's say you have $1,000 to use as your war piece. Okay, let's go back to where, what I was telling you about, Ray, and it may take time. You want to build up to get to your war piece, but that's your goal, is to get a large war piece, to get $5,000 to use as your war piece. Let's go back to Ray Boom Boom's room at 10. We already know, at 10 and 20, go to 20, you get $2,000, subtract one, boom, boom, bing, $1,000 in profit. Now, you can do one of two things. Either you can pocket that 1,000, or boom, let's add it back to that war piece. Now you got money to play with. Now it's $2,000. Oh, come on, y'all. It's getting easy. It's getting easy. It's getting way too easy. Look, that $1,000 increase to another $1,000. Boom. Guess what? Let's flip it again. Let's double it up. Let's put that 2,000. Let's find another play. Let's say company XYZ. You found it. They was at $2. They trended between $2 and $4. Okay. You put 2,000, 2,000 in that by 2. Okay. All right, $1,000. Y'all, come on now. I mean, not $1,000. 1,000 shares. That gets you 1,000 shares. Okay. For XYZ, $2,000 that you're going to invest in XYZ. Okay. You're going to trade with it XYZ. You get it at $2 per share. You put the 2,000 in there. It jumps to 4,000 times 4, $4,000. That's a 200% return. Oh my, come on now. Come on. That's 4,000. You're almost at your war piece. You're almost at your goal war piece just by a couple of plays. That's a couple of plays, couple of turns. You're almost there. Boom, one more play, you're there. You want to be, you most likely you're doing this smart stuff. And that's why I told y'all. That's why I said at the beginning. Remember, you buy in bulk. That's why that's one of the most important things. You want to buy in bulk. You don't want to be buying ones and twos. You're not going to get this type of movement. You're not going to get this type of return and profits if you're buying ones and twos. You want to buy in bulk. And that's what this does. This allows you to buy in bulk. By using that amount. Remember, and that's why, the safest way, to get those type of profits is to do your analysis, do your homework, pinpoint where you want to get in at, pinpoint where you want to get out at, and keep turning it. Keep turning it. Take that 4,000, boom. Man, I want to double it up. Man, think about that. You reaching your 4,000, you almost at your 5,000, boom. That's another play. I'm going to show y'all something with this. It's so powerful. I'm going to show y'all something. It's amazing. Crazy amazing. Okay. Now you got your 4,000. You flipping this. You moving. That's why I said you got to get out of the mindset of letting money rule you. You can't let money rule you. You're not going to make this type of money. You're not going to understand what to do with this type of money if money controls you. You have to learn to be the master over money. Because if you do, you can, all this play comes in, oh my goodness, with ease. It comes with ease. It's just a tool. Money is nothing but a tool. Hear me out. It's nothing but a tool. Utilize it to make other money so you can do your thing. Okay? Bing. Now, let's say you hit. Here's the, oh my goodness, here's the amazing thing about the war piece. Here's, flip it. You hit your 5,000. Let's say you hit your 5,000. Woo! 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 Y'all about to feel this. You hit your 5,000, right? Boom, you got your goal. You made your goal of $5,000 for your war piece. Okay? Come on. I mean, it's that next level. Y'all want to get on that next level of trading. I'm trying to get y'all there. I'm trying to get y'all there on how to make that money. Boom. 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 Yo, I got 5,000. So I'm going to make, no, you know what? Hold on 1 second. You know, I'm going to make that work. I'm going to make this work in 4 different ways. Look at this. You all, look, I'm showing you all diversifying your trades. Woo, look, I'm amazing. Look at that. Look at your 5,000 goal, your $5,000 goal, your war piece just turned into more soldiers. Listen to what I'm saying, y'all. It just turned into more soldiers. Now you got 1,200 that's going to work for you. I want to divide it. This is where your strategies come in at, y'all. This is where you diversify your strategies, and you're able to now you're able to get that thing to working in other. Oh my goodness! That's why you take a day out. You know, take a Sunday, take a Wednesday, whatever time it is. You put your strategy together. I'm telling you, beast mode. You go into beast mode, and then you're saying, "This is my war piece. These are my soldiers." So I want to find 4 different. Oh man, come on, y'all. Come on. I gave y'all the screeners on how to identify the companies. I showed you how to go in there and find your entry and exit. Look. Let's say this one, you know, this company A, you know, is trading at $2 per share. You know, company B is trading at $10 per share. You know, you found company C trading at $8 per share. You know, company D is over here trading at $7 per share. I mean, you found these, and they gap. You know, you saw where they gap, where they trend. You know, they trend. This one is between $2 and $4. This one is between 10 and 15. You know, $10 and $15. This one's between 8. You know, between 8 and let's say $10. Let's say this one is between $7 and $15. My goodness. Look at all the profits that all these are going to make. Think about it. When you start to do your math for all 4 of these, look at the profit that all these are going to make on your behalf. And you're at work. Let me tell you, you went to go to your kids' games. You know what I mean? You went to work. You know, you went to go line dancing. You went on your vacation. This is money working for you. That's money working for you. Easy. That's easy money working for you. All 4 of these at play. And guess what? Once you reach, you know, your exits on these 4 plays, guess what? Let's go back. Woo, boy. Man, peep game. They made the profits. All these made the profits that you needed. You know, that goes back. And guess what? Wash, rinse, and repeat. Start all over. Man, can you imagine? Think about it. Now, I'm showing you all on a minimum, okay? I'm showing you all, yes, it's time well spent. I'm telling you, it is worth it. It's worth the time to get in there, understand your analysis, and make your plays. I'm telling you, I forgot. I'm gonna sound like a infomercial. I got the headphones. You know, I got the headphones right now. You can make it right now. You can do it right now. $9.99. You call right now. You can get a great deal. Matter of fact, woo, let's slice it in half. $9.99. Call right now. You got it. But anyway, but peep game. You know, you put this in play, and it's money working for you. This is a war piece that's working for you constantly. You know, you do your homework, and you ain't doing nothing but putting that back into the bucket. All right, what's next week? What can I make next week? Know what I mean? That's money just working for you. Why you going out line dancing and on your vacation? That's how you make it. And guess what? As you become more acclimated to this strategy, as you become, I'm telling you, you can diversify it in so many ways. But I'm telling you, as you become more acclimated to the strategy, you can do so many things with this thing. You can do a 3, you can do a 2, you can do 1. You know, however else you want to utilize your war piece is based on you. Remember, that's your war piece and it's working for you. Here's the good thing about it is, dude, it's no limit. Could think about that. $5,000. I'm giving y'all the secrets, y'all, for free. I'm giving y'all a basic secret for free. Most cats ain't gonna give it to you all. Y'all realize that? They will have y'all paying hundreds of dollars to show you all how to. Why? Because I want y'all to eat. I want y'all to eat. You know what I mean? I want y'all to get in there and I want y'all to eat. I want my people to get in there and eat. That's why I'm trying to give you all this for free, so you can get in there, make that money, and do things. Let's get up out of there. This is the secondary income. This is third income. While you get your main job, you hustling out there with your Grubhub, or DoorDash, or you got your second job at Amazon or something. While you got that, you got three sources of income. One first job, you got your second job hustling, and you got your trade, that's making money. Goodness, you building. So 5,000, man. Could you imagine? Oh man, come on, y'all. Come, I'm done. And that's because you understand that money is nothing but a tool. Could you imagine your war piece at $25,000 and you going into trades? Oh my goodness. It's crazy. That's crazy. You go into these trades with 25. You set it up you set it up and like I want to do four of these across the board. That's like $6,000 each. Ooh, all them shares, all them shares. I was just telling you, all them shares you buying, and they're going to work. Can you imagine all 4 of these at $6,000 plays on a low account, turning over the profits that you have on $6,000? Remember what I was showing y'all with just $1,000. I was showing y'all that with $1,000. Can you imagine $6,000 going to work for you? Huh? Strategy. Free strategy for you all. Free strategy. Woo! Free. And that's easy. You hear me? This is easy. Easy money. Going to your sleep. I'm telling y'all, when you understand, listen to me, my people. Listen to me. This is the Lord God put this on my heart to share this, because remember, I told you I got all types of, I got a lot of strategies, from options, to stocks and things like that. It's a lot of strategies I have in play, that I can utilize at my disposal, and it's good because it keeps things pumping, on the side. And I got goals I want to make. I got goals I want to make. I want things to do. I got things to do I want to do, And this is one of the pieces that can help you be able to do some things. I'm telling you, these type of secrets is what people be paying thousands to try to understand. I'm telling you, cats, investors, and things like that, deep ones, they want to get in your pockets. But man, I'm giving y'all this for free. Listen, when you understand the war piece, game over. When you understand war piece, the game is over. It's over. It's done. Look, I know I talk a lot, about stocks. I'm in it. I talk a lot about stocks. And real talk, stocks are great, to invest, great investment tool, great trading things. But look, I just want y'all to eat. To be honest, I just want y'all to make it. You know what I mean? I want y'all to have some money in your pocket, some extra income. Look, real talk. 2015, very few, especially our culture, very few was trading back then. Okay, very few. All right. There was an article that came out in the New York Times talking about the increase in investing from regular Americans since COVID hit. The percentage is never seen before. And I never understood why I had to get into investing, a long time ago. But now I see it's because people like you are hungry to understand that secret of being able to make the income they need to make. And let me tell you, real talk, the economy is getting crazy. Inflation is on its way. Y'all, a lot of stuff was down. A lot of interest rates and all that stuff was down, back then. But when the economy picks back up, you best believe a lot of them prices are going to shoot through the roof, and you have to be ahead of the game. You have to be ahead. You got to be able to keep up with that. That's real talk. If you're not in something like this, if you're not investing, y'all see how they arguing over getting $15 an hour on minimum wage? Oh, y'all arguing over that with a crazy economy we have. We can't. Gas is almost $3. You know what I'm saying? In my state, it's almost. Come on. And we still in a downtime. Come on. Y'all see what they did in Texas? When them lights is off, then the people got to pay all that. They got to pay that money, that bill. Their lights was off for weeks. Come on, now that ain't even right. But that's the switch. That's the change that's coming about. But you want to be ahead of that by having means of income that can kind of offset these type of things. That's why I'm trying to school you all to be able to get in this and be able to do your thing. For real. I may not know it all, but I know enough to be dangerous. Real. That's real. That's real. Now look, I'm about to end this. I have a Q&A session on Tuesday. Write down all the questions you have. I may not be able to cover all of them. I think I'm going to extend it because I think a whole lot of people have questions. Write them down. I seen everybody raise their hands. I'm probably gonna go back through this chat to make sure I'm catching, some of the things that you all were saying. But write those questions down. Again, join the investment group. I got some great administrators, some great knowledgeable people. Jennifer, big shout out. She's cold with it. She's on the page. Got my cousins on there. Jock, big shout out. I got some strong investors that can help you with, answer some of your questions and things like that. Hey, hit it up. I'm telling you, it helps. It helps big time. But I'm telling you, y'all can do it. You all can do it. I gave y'all the bare basics of trading. You all can get out there and trust me, y'all can do this. I hate to say it's not rocket science, but to be honest, when you're able to put a strategy together and execute, it's over. Game over. Your mind is now unlocked. Use that power. I appreciate you all joining me today. Man, one love. Man, y'all stay safe, stay blessed. I'll holler at y'all.